Stress Talk 414, Low the Legend in the building. Back at you again. Another teaching moment as usual. Low the Legend, I gotta drop jewels on my people when you don't know. Today, you know what we're gonna be chopping up about? We're gonna chop it up about insurance policies. It's a biggest misconception, a biggest detachment with African Americans and they understanding about insurance policies. Insurance policies is for the living, not for the dead. And I'm gonna break it down to y'all real quick of why insurance policies is for people that living. So you take a scenario when your child is first born, you get a policy on them. You get the goal is to try to, of course, get a whole life policy, but the whole life policies is kind of hard to get in this day and age. They kind of don't exist. And when they do exist, they kind of hard, got high premiums. But the goal first is to get a whole life policy. They kind of rare, but they still do exist. They kind of around. So let's just say when your child is born, you get a life insurance policy on your child. And that policy has a maturity date. So every life insurance policy have a LTV value on it. That's a loan to face value on the insurance policy. So you get the insurance policy when the baby is born. Let's just say when the baby get to 35, 40 years old, let's just say around 30 some years old, that insurance policy mature to at least 70% of that face value. So let's just say the face value on that insurance policy is $200,000. When that child gets 30 years old, they're still alive, they in college, maybe they started their own family. So what the family do at that point, we go get 70% of the $200,000, 70% of the $250,000 off of that policy. We take that off, we open up some family businesses, we put some money in the trust, and what do? We get another policy to start it all over again. Insurance policies is for the living, they not for the dead. Because let's be real, if something happened to one of our loved ones right today, truth be told, nobody is going to say this, but you don't need an insurance policy. The average funeral right now is for a nice funeral was $10,000-15,000. If people love and care about you, the average person is going to chip in a few dollars here, a few dollars there, and the family is going to give you a decent burial. So that's a misconception that insurance policies is for the dead. If anybody loved you or care about you, if you was any kind of decent person, yeah, they might sell some dinners and fry some chicken, but it doesn't matter. At the end of the day, you're going to have a nice burial. You're going to be put in the ground properly. So insurance policies is not for the dead. It's for the people that's living. So now that you got 70% of 200,000, you done put some of it in a family trust. Y'all started some family business, bought some real estate, got a diversified portfolio. What do you do again? Your son is 35, your daughter 35, you repeat the cycle. You get another policy. So now when that person is 70, 80 years old and still living, you go grab 70, 75% of another $1 million policy. Or maybe y'all upped it to $2 million. So now that money off of it, so 70% of $1 million or $2 million policy, once again, that goes in the trust. And now this is how we create generational wealth. So insurance policies and real estate is one of the two things that people use in the United States to build generational wealth. That's one of the things they don't tell you. That's very important that we know. Insurance policies is not for the living. Insurance policies is not for the dead. They're for the living. Tap in. Stress Talk 414. We got more informative stuff coming. Holla back.